Okay, are you guys there? Hello, hello. Ready for some training?
Hello everybody, how are you? So before starting today, this is a chart where we left the last time. We will, as usual, make a short presentation of the content on the context of the content of this session, and here is my PowerPoint presentation for that. So we will begin first of all with some recaps and some thought about the homeworks you have sent. We will then review some elements or view some elements of the Bollinger Bands and the Vinini, and then after that we will see some additional indicators. These indicators you will see are not mandatory with the MAX system. You can use them or not. It's your choice. I have added in the list of these indicators some indicators I call comfort indicator. You will understand that. And then we will continue with an important concept you see here, the TTs. And after that, some recommendation I have expanded, and then the homeworks. But first of all, I would like to review some points about your homeworks. First of all, I have seen that not all the students have made the two homeworks, and only perhaps 20–25% of them have made their statistical homework. And this is a thing you must not neglect. I encourage you to make this kind of homeworks because you will know exactly by this kind of scrolling the edge you have with the MAX systems. Let's see some statistical result I can present you. If you do this scrolling exercise, you will see that the modes, what kind of the modes? BT mode, BO mode, safe mode, REMO, have an average of winning rates of 85%. This percentage, of course, may vary over time. It can go as low as 60%, but as high as 95%. But on each pair, at any time, you have an average success rate of 85%, which is really a very high percentage. Now, if you go further in this study, and I encourage you to do that, you will see that among all these modes, all the modes which are successful trades, you will have between 25 and 30% of them with no scaling. This means that you have 70 to 75% of them with at least one scaling. This means one scaling or more. You have approximately 50% of the modes which will have two scalings or more, 20 to 25% three scalings or more, approximately 8%, 10% with four scalings or more, and about 5% with five scalings or more. These are the kind of knowledge you must have with the MAX. This is the edge the MAX gives you when you do your homework, when you do your due diligence to know how the MAX is working. Pair after pair, time frame after time frames, time after time. You can check this at every time. Now, 6 months ago, 2 years ago, I have gone until 20 years ago at the very beginning of the 90s. For those of you who remember, at the beginning of 1992 or 93, I don't remember the exact date, when George Soros made his famous short trade on the pound against the Dutch mark. So at that time, you had exactly that kind of success rate. So this is the edge you have to know with the MAX. And I can give you a quote of a famous trader. I'm sorry, I don't remember the name. Perhaps some of you will remember. If you know your edge, you are a trader. If you don't know your edge, you are a gambler. And with the MAX, if you do the necessary effort, you know exactly what is your edge. And you must handle your trading as a true business. So I encourage you to make all the homework which are required. And Max Douglas, perhaps, I don't remember, Nicolas. I don't know. So for those of you who have not made this scrolling exercise, please try to make it for the next session. You will see it is very, very enlightening for most of you. So what we have seen the last session, we have seen additional indicators. We have seen the OBOS 13 with the 13 period parameter. We have seen that it acts as exactly as the stochastic RSI. It is in fact a stochastic indicator. And we have seen that all the signs given by the STO RSI are also present in the OBOS. And an important sign given by the combination of both is the crossing of the STO RSI and OBOS, mainly for exit signals. We have then had another indicator which gives you a better feeling of the exit of your trade, partial exit or total exit. It is the non-lag moving average. So it helps to appreciate the extent of a movement. Even if you see in a movement a small pullback coming, as long as this non-lag moving average is in a good shape, you can confidently stay in the trade. We have then seen how to place our stop loss, and I have precise that it is an emergency stop loss. It is not the stop loss which invalidates the trade. It is the emergency stop loss which gives you enough place in the price for the price to breathe. And so, just a rule of thumb, it is just a guide. You have to know that in the 5-minute time frame, depending of the pair you are trading, your stop loss will in general be between 30 to 50 pips. For the first stop loss in the initial mode of a trend. Now you will have to adapt this stop loss as far the trend is evolving. And the best way to adapt the stop loss is to place the stop loss around the balance line, the blue balance line. We have also used, you have also to use some other consideration. Oh, I have a small spelling error here. As a consideration, if you have several convergences between the Bollinger Bands, the last swing high-low, the place of the moving average, the place of the home base, you have to take into account these elements to have a better place for your stop loss and avoid the risk to be exited of your trade too soon and let the trend develop. We have then seen a very important concept at the second part of the session, the type of waves, the primary, the secondary, and the tertiary wave. The primary wave around the home base, the secondary wave around the EMA 89, and you know that there will be, in average, 2 to 3 secondary waves in a primary wave, and the tertiary wave around the 21 moving average, and there will be also, in average, 2 to 3 such waves in secondary waves. And this gives you a clue when you must be more prudent in your trades when you reach the number of three scalings in a tertiary wave, the third tertiary wave in a secondary wave, the third secondary wave in the primary wave. These are all signs that a trend around the home base may weaken and even reverse. And so you know that the max rides the secondary wave, the REMOs and the scalings explode the tertiary waves, and the scalings also explode all their pullbacks or some of their pullbacks and edges in order to accelerate, it is the A of the max, to accelerate the profit you can make with this wave. And as I have said just previously, you must be more cautious after the number 3 scalings, 3 tertiary waves, 3 secondary waves. Well, we have seen at last the Vinini indicator, which helps to identify the secondary waves, which give you also all the confidence to stay in that waves as long as the Vinini itself is very strong and trending. And by the different signs or patterns the Vinini show, it gives you clues for some exit, whether XXX at extreme situation of the indicator. And all the other signs, like for example divergences for XXX, and a green line and yellow line at extreme for trend reversal. These are important considerations for the for the trade you are handling. And you have added, so with all these new indicators, some exit techniques. So I just remind you, the use of the crossing between the obos and the RSI, the tops, bottoms, M's, W's, divergences in the obos, the non-line moving flattening, the stop loss, of course. I have indicated you when you can consider when a trade is invalidated, and also the same sign, tops, bottoms, M's, W's, and divergences, extremes in the VND. Okay? So now I would like, before to, not this one, before to continue with our presentation, I would like to show a chart, an example, about the concept of BTMO. It seems that some of you have some difficulties to correctly identify a BTMO. In the homeworks, we have received this chart, and the student who made this chart called this a BOMO, and in fact it is a BTMO. It looks like a BOMO, but it is more a BTMO than a BOMO. I have explained to you that sometimes it is difficult to make the difference exactly between a BOMO and a BTMO. But the main criteria to see if a movement is a BTMO, there are two signs. The first sign, the most evident sign, is when the price goes immediately from one side of the home base to the other side of the home base, without wasting too much around the home base. Here you see the price stays 15 or 16 bars around the home base. So you can say this is the sign of a BOMO. And if you take a larger view of the movement of the price, you see that the price was around the home base for a much longer time period, in a tight range of 30 pips. But you have the second sign of a BTMO, the 3 EMA. The 3 EMA, who, when the price crosses down here the home base, the 3 EMAs are well separated and well pointing downward. This is an important sign for the BTMO. And so this is the reason why we can consider this MO more a BTMO than a BOMO. And so you have your entry here on this bar after the home base has been crossed. Of course, because you have a zone of consolidation here, you can always draw the support line of this consolidation and consider to enter your trade when this support line is broken. That's a nice way to handle this entry. It is also called a BTMO handled as a BOMO. And it's correct to do that, or you can wait eventually the little pullback here, but this is a BTMO. If you have a doubt, look how the 3 EMA are behaving. This will give you the best clue if the movement is a BTMO or a BOMO. And if you still have a doubt, just try to ignore the BOMO and the BTMO and try to find the safe and perfect MO. So it will be after a pullback in here or just on the MO line. Okay? So I hope this will be clear now. And so now let's continue with our presentation. So I will close this chart now, and let's go to the MetaTrader. So next week we ended with this kind of chart. What we will do now, we will ignore the training wheels. I remind you that the aim of the training wheels was to give you an idea of what must be the momentum of the price when you have a MO, a first MO, a MO at the beginning of a new trend, whether it is a BTMO or a BOMO or a safe MO. Here you see that the best entry you can have, it is the safe entry MO, which is given here. And in this case, let me change the color of my line here. Okay, white line. And here, as it is the first MO at the beginning of the trend, we must wait for the price to reach or to cross the lower level of the trailing wheels, lower level because we are in a downtrend here. But later in the movement, when you take an aftermow or a remow, like here, for example, let's suppose this is a correct mow. Let's see, 1, 2, 3 bar. Yes, the mow line is pointing down. This is a correct remow. No, it's not right. It's not correct because the mow line is above the blue balance line. So you have the correct remow here. Okay. In this case, because the trend is already well developed, you don't need to wait for the price to reach and to cross the trailing wheel. Okay? So you don't need to put your entry here. Only here. Okay? This was a very important consideration to have, because now we are going to take off the trailing wheels and we are using the Bollinger Bands to have a better appreciation of this momentum depending of each pair. Each pair, have a different kind of volatility, and considering a first movement of 10 pips is not adequate for each pair. It was just an introductory tool and visual tool to help you to grasp this concept of momentum. So now let's take the next template I have prepared. I think it is this one. No, I will not still show it for the moment. Let's just take off in the properties of the mow line the two levels. We will not delete them. If you want to keep them, you can use them, but you will see it's better with the Bollinger Bands. So to hide, it is enough to hide these levels by choosing the non-color here in the levels properties of the moving average. And you see the trailing wheels disappears. And now you will use the Bollinger Bands to have an idea of where you must enter after a first for the first mow. And the best entry for the first mow will be often, not always, but will be often in the distance between the mow line and in this case the lower bands of the Bollinger Band, in the middle distance, or in the second half of the distance between the mow line and the Bollinger Band. So let's draw a vertical line here. You see, this is the distance between the low of the setup bar and the lower Bollinger Bands. If you take the middle of that here, this will often be the best momentum or the best place to enter. You can see that better if you want to train with some homeworks, if you draw also on your chart the first, not the moving average, but the Bollinger Bands, the first moving average, the first standard deviation. Let's draw them in lime color, for example. Here you have the first standard deviation of the Bollinger Bands, and you see right at the middle between the mow line and the second Bollinger Band, you have the first Bollinger Band, the first standard deviation. And this will indicate you the most adequate place to enter the mow. But unfortunately, it will not always be the case. So the rule you can apply is the following. Let's take off this line. If the price have moved more than 10 pips and is near the first standard deviation, or is near the midpoint between the mow line and the Bollinger Bands, you have a right price to enter. Okay? And sometimes, when the Bollinger Bands will be very squeezing, we will see that later in other kind of mow, you will have to wait for the price to reach the Bollinger Band. So this is just a guide rule, for the enough momentum the price must have to enter. Now, let's take off this first standard deviation. We don't use it, in fact. Visually, you can see where must your price entry to be. Later, when you have a remo, for example here, you will have to make the difference between two situations given by the Bollinger Bands if they are showing a consolidation zone. How the Bollinger Bands show a consolidation zone? You see that the Bollinger Bands are narrowing, and at some time, one of them, the bands which correspond to the direction of the trend, becomes quite horizontal. Now you have to make the difference between a normal consolidation zone and a squeeze zone. A squeeze is when the Bollinger Bands are very, very close to each other. In general, for a pair like the pound yen in the 5-minute time frame, you will have a width of these Bollinger Bands which will be less than 40 pips. Example, here you have 20 pips. If you take the width when you have the Mo here, you have 28 pips. This is less than 30-40 pips. In this case, you can consider this kind of consolidation as a squeeze. And in this case, instead of taking your remo after the price, the setup bar, closes below the Mo line, it is always better to wait for the price to cross the consolidation zone, which is forming. You will have a better entry point. And sometimes, if the price reverses back, you avoid a trade which is not worthwhile. Now, if the width of the consolidation zone is larger than these 30-40 pips, you don't wait for the consolidation to be broken. You enter normally, like here, after the setup bar has crossed and closed over the Mo line. Because you have enough place for the price to move between your entry and the next support line here. Okay? For example, here, let's try to find an example. What is the width of the Bollinger Bands here? 53 pips. You have 50 pips here for between the two Bollinger Bands. And here you have a remo, which is happening. Okay, that in this case, you can enter immediately. You don't have to wait for the consolidation zone support to be broken. Okay? So you have two kinds of situation to see. If there is a consolidation for a remo, is it a squeeze or a large consolidation? And depending on the case, you will make your entry differently. Okay. So this is very important for entering your trade with the help of the Bollinger Band. Later, I will give you also some small additional information about the Vinini, as example will appear later in the presentation. But now I would like to add a new indicator which may help you in many circumstances. This indicator is not mandatory. It is what we call a tumbler. If it gives an information, this information may be negative or positive. Is it negative, we will ignore it. If it is positive, it will add a strength to the way to take the trend. And now I will show you this indicator in my template for A. You see, we have rearranged here the indicator in another way. I have put here in the third zone the Stochastic, and here, instead of the Stochastic, I have used an indicator which is the accelerator oscillator. The accelerator oscillator, or AC, you all know this indicator. It is the accelerator oscillator of Bill Williams with his alligator trading method. And this indicator shows you if the movement which is developing will accelerate or will decelerate. Let's take an example. This example, you have a movement here. And you see, of course, afterwards that the movement goes very quickly downwards. If you look what the accelerator is showing here, you see that it became negative several bars earlier in the past. And when the price goes to the low side of the chart, you see that this accelerator becomes more and more negative. So when you have to open a trade, whether it is a move, whether it is a remove or a scaling, for example, here you have a possible scaling. Here you see a ledge which is forming, so you can scale in when the support line of this ledge is broken. Oops, like here, for example. You see while this bar is forming, you see that the accelerator is red. This is a favorable tumbler. You know that with the accelerator, the price is gaining acceleration. It is gaining strength. The accelerator, in fact, means it is not the price who is gaining strength. It is the momentum itself which is gaining more strength. The momentum, which is exemplified here by the Stir RSI or the OBOS, show the momentum of the price, and the accelerator, in fact, shows the strength or the momentum of the momentum itself. This is why it is the accelerator. It is exactly the same concept as the accelerator with your car. When your car, when you push on the accelerator pedal, your speed increases, but in fact your accelerator also increases. And when your speed has arrived at a constant level, your accelerator is 0. Okay? And so as long as the accelerator here is negative, the speed of the price is faster and faster. And it is constant normally when the accelerator is at the 0 line. And if the accelerator becomes blue and positive, this is a negative tumbler. For example, here. Now, you see that you have eventually the possibility to make a scaling here. Okay? Let's neglect for the moment all the other consideration for example, the divergence on the Stir RSI, which will indicate instead of an x-axis. It's what I want to show you here. Let's suppose that this scaling would appear not here, but here, on this little pullback. Oops. On this little pullback. Okay? On this pullback, you see that the accelerator becomes blue. We could say that because it is blue, it is a negative element. But the accelerator is often leading what the price, often, not always, is often leading what the price will do. So the negative part of the accelerator here will often begin after the third negative bar in its drawing. So here you have the first blue bar of the AC. Here you have the second blue bar, and there you have the third blue bar. After this third blue bar, this element is negative. Before that, you ignore it. So, in a down movement, to summarize the rule, if you have an entry point, and if the accelerator is red, it's a positive sign. If it is blue, but not farther than the third bar, it's still a positive situation. After the third bar, it becomes to be negative, but you can ignore it and you will have all the other signs with the main indicator. It is also, of course, the contrary for an uptrend. Here, you see, for example, on this scaling, then the accelerator is blue. This is favorable for taking the scaling. This shows that the price is gaining accelerator, that the momentum of the price is gaining strength. Now, let's take this situation. You have here a possible scaling, eventually a remo if you have exited everywhere. You see that on the entry bar, oops, I cannot take the vertical line here. On the entry bar, so where is the sector bar? The sector bar is here. You see you are on the second blue bar, so this is negative, because we are in the negative zone of the acceleration. But on the entry bar, you are now on the third blue bar of the accelerator. Then you know that after that you will have a positive situation, a favorable situation with the acceleration here. The fourth bar, as the next bar here begin to build, this bar will be blue and it will be the fourth increasing bar. You have a positive situation. So this is a possibility for you to make the remo or the scaling here in a more favorable situation. Okay? Of course, in the following scaling, you have the accelerator in the positive zone. You have no problem. Here, you are not in the third negative bar, so you can take the scaling. Here, this one, you are now in the second blue bar. This is a little too soon to take it, so it's dangerous. But on the next bar, it is on the positive. A positive accelerator in an uptrend is positive, so here you can scale it, and so on. Now, if you want to have more detailed explanation about the accelerator, you can read the book of Bill Williams, Trading Chaos. But I just remind you, this is not a decisive indicator. You do not take your main decision with this indicator. It just gives you tumblers. If the accelerator is favorable, it will add strength to your trade. If it is negative, you can ignore them. And so, in fact, here, if you would have entered here on the entry bar following the setup bar for the remo, it was also a good choice because you can decide to ignore the negative sign of the accelerator. If you want it to have a positive tumblers, you wait for one more bar. It's your choice. Personally, when the accelerator gives negative information, I purely neglect it. Okay? Well, this is for the accelerator. So you will have this indicator in the template. It is a standard indicator in the MetaTrader. If you see in the indicator list, you have a special topics with the indicator of Bill Williams, and it is the accelerator oscillator here in the list of indicator, and it has no parameters. Okay? Well, now a second indicator I would like to show you tonight. It is what we call the yes, Anthony, we may call this a comfort indicator. Indeed, you can use it or not use it. Now, to show you another indicator, which will be very, very useful, it is this one. I have already prepared the template for B. Let's go to the end of the chart. Here, it is the signal bar. Many of you already know this indicator, which is found easily on some Forex forum. The parameters of these indicators are the following. It is the version 7.1. So you have, first of all, a password in the indicator. The password, I don't know if you can see it clearly, but it is in small letter 3_@_TSD. Then another important parameter is to place it in the right corner of the chart. If you set the parameter to true, the indicator will appear to the right of the indicator or of the chart. If you set the parameter to false, it will appear at the left of the chart. Yes, thanks, Chris. Password 3_@_TSD. Another indicator, another parameter which is important, it is the signal bar window. If you put 0 here, let's put 0, the indicator will appear in the first chart, so in the chart in the zone 0. And if you put One, in the signal bar for the Windows, like we prefer to do, the indicator will appear in this zone. Okay? And a last parameter which is useful to know in this indicator. Oh, I have deleted. Sorry. I went too fast. Edit. The last parameter which is useful is here, show smaller size. And you set this parameter to true. If you put this parameter to false, the signal bar appears with larger letters here, and it will be a little more difficult to read. So this indicator shows you some information like the current price, the spread for this pair, for example 6 for the pound yen here on this platform, the number of pips from the current price to the last open, to the last low, and the daily average. For example, here we have the 266 pips as daily range for the pound yen pair. But this is not the most important information the indicator gives you. The indicator gives you the situation on all the time frames from 1 minute to 1 day of 3 standard indicators, the MACD, MACD, the relative strength, and a moving average. It's not important to know the parameters of this indicator, that they are standard parameters, but what is important is to see for the time frames which are around the time frame you are trading. For example, here we have the 5-minute time frame. So the 5-minute time frame is the second column. What is important to see is what the price is doing in the time frame which are around the 5 minutes. The M1, M15, M30, and H1. Higher time frames are not very interesting. And what is important is not that you have the same color everywhere, but that you have a majority of the same color. Green means that the trend is up. Red means that the trend is down. You see, for example, here on the 5 minute, the trend is up. It is indeed the case. The moving average are up. If we go to the H4 time frame, we see the movement is down. Okay? So with this simple indicator, you see at a glance what the price is making mainly in higher time frame. But you don't need to see all the time frames. If you are trading the 5 minute, the 30, the 15, the 30 minute, and the 1 hour is well sufficient to be in sync, in synchronization with all these time frames. And so what I'm looking for, it's not all the detail, but if I am trading wrong, have I a majority of green status in the signal bar? If I am trading down, have I a majority of red status in the signal bar? This will give you also an idea of the risk you are taking on the trade you will open. Okay? Well, I will send you, of course, this indicator in the list of the indicators you will receive today. There are also some other comfort indicators you can eventually use. For example, let's take the temple C. Here, let's see. We have some indicator which gives you white arrows here. These arrows appear when the price crosses down or up the home baseline. And it is very useful to know that when a down white arrow appears, you must trade mainly the downtrend. And when the last arrow is an up arrow, you must trade the uptrend. You must trade the uptrend, of course. These indicators has some parameters. You do not have to change them. Do not change them if you want the parameter to work, the indicator to work correctly. What you can change is the alarm. You have two kinds of alarm. A sound alarm. Whenever the price crosses the home base, you can switch on sound alert if you set the parameter to the true value. And you can eventually, if your platform is set correctly in the tools panel here, you can also have an email which is sent to you. So I don't use this kind of things because I am always in front of my screen, but if you try, for example, with a mobile, this can be eventually useful. But the sound may be useful. Okay? Then another comfort indicator we can use also. You see here a little magenta arrow which is pointing down. It is an arrow which appears when the mo line itself crosses the home base. And on this, with this indicator, you have also the possibility to have a sound alert by setting its parameter value to true. And don't change the parameter of this indicator. They are set up exactly to have the arrow when the mo line crosses down or up the home base line. And you see here, because we have a shift of 3 with the mo line, the arrow appears exactly on the bar. Let's put a vertical line. We have 1, 2, 3. 1, 2, 3. You see it is at the third bar to the right that the cross appear, but in fact, because of the shift of the mo line, you know it is 3 bars earlier, so the arrow appears on the correct bar. It will be a down arrow for a cross from up to down, and an up arrow for a cross to from down to up. How or what are the kinds of movement the max is looking for? Now you know what are the movement the max is looking for. And this is always the first objective you have to specify in any trading method. What are the kind of movement you want to exploit? And then adapt your indicators consequently. How to have the acceleration phase of the max. I remind you that the acceleration is how to take as many pips as possible from that movement the max is looking for. And now, please be attentive. I will teach you the secret of the max. So pay attention for the explanation I will give now. There is just one thing new on the chart. Let's go to the end of the chart. And you see, these are the line. If you pay attention to this line, you will see that in fact there are channels around the home base line. And indeed, let's click on the first green channel. You see it is an envelope, which is a standard indicator in the MetaTrader platform, with the same period as the home base, the same shift. It is an exponential moving average applied to the close, or I prefer to use the medium price, but you can use the close. And you have a percentage of deviation here. But let's keep the close. The difference is not important. 0.34%. Okay? If you take the next one, you have the same characteristic, except for the deviation, you have 55 or 0.55%. Yes, Bones, these channels are what we call the tiger tunnels. No, Dave, they are not Vegas lines. They look like the Vegas line. And in fact, Jim learned from Vegas to use channel around a moving average. And then what Jim has made of extraordinary is to have adapted these channels to some very specific values. Let's take the following envelope, and you see that the deviation is 0.89%. So 34, 55, 89. The next one will be 1.44. These are all Fibonacci numbers, indeed, Arnold, Fibonacci numbers. You could ask why Fibonacci numbers. In fact, it's difficult to have an explanation why these Fibonacci numbers work, but let's have a look first to see how these levels works. And to better see that, let's make a zoom in the price. Okay, tell me if you see correctly the chart, if it is clear enough. Okay. What do you see here? For example, here. Remember, this day we had an important news on the USD, on the dollar, US dollar. We saw a first movement upward, then a fast down movement. And see here where the price stopped. Quite right on a tiger tunnel. See here where the price stopped in the down movement, right on a tiger tunnel. See here, after the movement, when the movement begins to exhaust, where the price closed, quite right on the tiger tunnels. At any moment in the price development, you can see that the price stops on a tiger tunnel. Look here, there, here, 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 here. Look here. During a very speculative movement, time period here, just a tiger tunnel here. Look here, a tiger tunnel. Look here, quite right on the tiger tunnel.
Eusebio.
Yes?
I'm sorry, you're moving the chart and talking and we can't see anything.
Ah, okay. Do you see now?
Yes, I can see your mouse.
The chart?
Maybe
okay.
Block it out with the little square thing.
Sorry?
Use the little blue square annotation tool to highlight.
Yes. Yes, we can use it today because the price are not updated, so the mark will stay. Let's use an arrow, for example, here, there.
You say it's also been asked if you could get rid of those bottom windows, if you could close or minimize those bottom windows and make the chart larger.
Yes. That's maybe an idea.
That might help. Thank you.
Okay. Let's close these these windows. We don't need them for the moment. Indeed. Delete window. Delete window. So you must see it more clearly. So here, look the price here where it stops. Now, look here where the price stops. Here. Here. Here, here. You see? You see there? You see there? And there again? And there again? And you see also how these lines sometimes act like a support line. Look here, during all this down movement, here. There, there. You see how the price just bounce off this level. Here, there, and there. You see? This green line acts as a support line. But the contrary is true also. Look here, this gray tiger tunnel. It has served as a resistance level. There, and there, and there, before the price bounces off to the downside. Okay? And so, indeed, these tiger tunnels act alternatively as a support line or as a resistance line. Okay? With the important characteristic, which is the following. When a price in a down movement crosses here a tiger tunnel, like here, you see during a long time the tiger tunnel, the first tiger tunnel here has served as a support line. If the tiger tunnel is crossed down, there is a very high probability that the price will go to the next tiger tunnel. If the price does not cross the tiger tunnel, there is a high probability for the price to bounce off and reach the upper Tiger tunnel. But if the price, like here, crosses down this second Tiger tunnel, there is a high probability that it will reach the next Tiger tunnel. And you see how these levels are very accurate. You see here, it has bounced off to the upside from the Tiger tunnel, and whereas the price stopped, it has stopped on the next upper level. And it's bounced off, it goes back up and down several times between these two levels. And when the level has been crossed down, where the price has gone to the next level, with a first little pullback, then the price crossed the Tiger tunnel, and where the price went to quite to the next level. What you will see very often, if the price crosses a Tiger tunnel, it does not reach the next level, very, very often it will stop just in the middle of the two levels. Let's try to find some example. I have to take my normal pointer. You see here, we had also an important news, and see where the price exhausted, just on a Tiger tunnel. You see? Here an example. Here, you see? Here. The price crossed. Let's take an arrow. Here, the price crossed the Tiger tunnel, the green Tiger tunnel. It did not reach the next Tiger tunnel, but it stopped quite at the middle between the two levels. And this is, this is frequent. If the price does not reach the next Tiger tunnel, it will often stop at the middle of the two levels. Here is another example. On the other side, here is another example. The home base itself can be considered as the zero level of the Tiger tunnels. You see here another example. The price crossed up the Tiger tunnel but did not reach the next level. It stopped at the middle between the two levels. And you can see that always and always. You can go as far as you want in the past. You will always see this kind of behavior. Look here. When the price crossed down the first Tiger tunnel, it reached the second. If it not reached the next one, it stopped to the middle, in the middle. On the other side, you see if the level is crossed, the price goes to the next one. And if the next one is not reached, it stops quite at the middle between the two levels. But very, very often, you will see that the price stops exactly on the Tiger tunnel. You see here, there, here, here on this green, the first green level, you will have, it has served several times as a support level where the price bounces off to the upside. Okay? This is true for any pair on any time frames. Let's look, for example, to the H1 time frame. You see that the colors are a little different because when we go higher in the time frame, the inner bands are or the inner channel are too close to the home base, we suppress them. So the Tiger channel auto-adapt depending of the time frame. And you can see here, the price stopped right on the Tiger tunnel, right on the Tiger tunnel, in the middle, right in the middle of two Tiger tunnel, on the Tiger tunnel. Look how the Tiger tunnel served as a support line here. Here it make a little pause on the Tiger tunnel. Then here it goes quite right on the Tiger tunnels, right on the Tiger tunnels, right on the Tiger tunnels, or quite near the next one. You see, and you can see that on every time frame, every time. If you take another pair, for example, let's take a usual pair, the Euro USD. For example, here on the 30-minute time frame, you see how the price stops right on the Tiger tunnel, or just quite right on it. You see, or quite on in the middle of two levels. You see here, right on it, in the middle of two levels, right on the Tiger tunnel here. So this is a characteristic of the Tiger tunnels, and this is the characteristics of the Fibonacci number. You can, or eventually the Lucas number, but the Fibonacci numbers are the most frequent. We don't have an explanation why these Fibonacci numbers works. It is exactly like the standard Fibonacci levels with the retracement and the extensions. We don't know why they are working, but we observe they are working. And they are perhaps working because the traders believe they work and they act on that belief. But how many traders do you know use the Tiger tunnels? Only the maxers. So why these Tiger tunnels are working? In fact, in my research on the Fibonacci numbers, this is a field which is extensively studied in many disciplines, mathematics, physics, in all the disciplines of the life. We often meet these Fibonacci numbers, as well as the microscopic level as the astronomical levels. And in some specific mathematical problem of optimization of process, it seems that the process, the growing process, which uses the less energy, are linked to the Fibonacci numbers, and more specifically to the golden ratio. So all the tricks in the Fibonacci numbers is the ratio between them. You know, in the suite of the Fibonacci numbers, if you make the ratio from one numbers by the previous one, you have the golden ratio 1.618. And it seems that in many processes, in many growing processes, in many processes which grows, the growth with minimal energy is when the growth respects the Fibonacci ratio. That's all the explanation I can give you for the moment. But how can you use these Fibonacci numbers, or these Fibonacci levels, or the Tiger tunnels? We call them the Tiger tunnels. And now let's go to the usual look of our chart, and let's put the standard templates on the chart. Well, here you see you have an uptrend. Somewhere here you have a remo. Okay, there or there you have a remo, and at the moment you have a scale-in, for example here, illustrated by this green diamond. I remember, however, the green diamond appear only when the bar closed, at the end of this bar. But when you see the MACD becoming blue and you have a pullback here, you know that you can scale in an aggressive mode. So here you can scale in somewhere here. Later on, when the price continues to go on, you have several signs to exit. You have, for example, a long bar, a long blue bar. You have several reversal bar here. You have also a top in the RSI. You have a top in the Obos. You have a top in the Vinini. But mainly, you see what? You see that the Tiger tunnel here is rejected by the price. What do we call the Tiger tunnel rejection? You see that several times the price went to the Tiger tunnels, but without definitely crossing it. So the Tiger tunnel has served as a resistance level. So you have here a rejection of the Tiger tunnel, and you know in this case that you can make an MX. It is an exit point. And if you have the conditions for an X66, you make an X66. Okay? Let's see here. You have a long pin bar here. You see? You have, on this bar, you have several signs to exit. You have a top which is forming on the RSI. You have even an M which is forming in the RSI. You have a top in the Vinini. But look where the rejection has been made, where the price begins to retrace, right on the Tiger tunnel. This isn't extraordinary? So you know that when the price retraces from that level, because it doesn't succeed to cross up the Tiger tunnel, you know that you have to quickly exit from your trade. whether it will be an MX or an XXX. You know how to make the difference between an MX and an XXX. Look here. In this situation, there and there, when you have to make an exit for several reasons. For example, you have a divergence here with the SI. But where is the price located here? Right in the middle between two tiger tunnels. So you know that in the middle of two tiger tunnels you are in a situation where you can consider to make an exit. You see here, you have a long pin bar, another pin bar which is also quite dodgy, a long bar. You know you are in a situation to take an exit. And you are right in the middle of two tiger tunnels. You see? Here, look here, how the tiger tunnel served as a resistance line. You know that if you make an exit here, you will have quite an optimal exit point. Here on the next movement, you see a long pin bar, and when the price begins to retrace, you see that the price is just in the middle between the two tiger tunnels level. You know that you have a place to consider to take an exit right at the top. Okay? Look here. You know that at this level you have an adequate place to exit. Here you have an excellent rejection of the tiger tunnel, so you know you can make an exit here. Okay? So this is the most powerful weapon you will have in your arsenal for your exit. And so always pay attention to these tiger tunnels. They will, if you have no other sign, or if the signs are not clear with the indicator, always make confidence to the tiger tunnels. They will quite always give you the right place to exit. Okay? Let's see some question. Can you use tigers for scalping in between levels? No, Mongo, we do not scalp with the Mac systems. But what you can do, you know that you can scale in whenever you have a green diamond or whenever a change, the right change in the color in the MACD is happening. For example, after a pullback, you can make a scaling. So you can also consider to make a scaling whenever the price crosses the tiger tunnel. When the price closes above the tiger, let's make a zoom here. Here you see that where were we? We were here. Here on this bar, you see that this bar closes above the tiger tunnel. If on the next bar the price stay above the tiger tunnel and show sign to go higher, you know you have a high probability for the bar to reach the next level, or at least the middle of the between the two levels. You can consider to make a scaling at that level, but be cautious with the small time frame, 5 minutes. You have to be cautious, but with higher time frames there will be no problem. And I see that I was on the 1 hour time frame here. So you see here, you had here a Remo. There you can scale in. Let's see another. This is not a very large movement. Let's see a more typical movement. Here you have a Remo. The price on this bar crosses and closes above the tiger tunnels. When the price retraces back near the tiger tunnels, and when you see it serve as a support line, you must not be too far out from the tiger tunnel. Then you can scale in, for example, here. Okay? But be cautious with the scalings above the tiger tunnels. So you have to be first used with the tiger tunnels to see how the price acts in real time around the tiger tunnels. Okay? So let's come back to the 5-minute time frames, and let's take 2 minutes now for eventually questions. If you have questions of what we have seen until now, I will answer these questions. TT parameters are set to change with each time frame, so best not to change the parameters. Indeed, you see here in the 5-minute time frames, the first tiger tunnel which appear is the green, is the gray levels. This is not, for the 5 minutes, this is not really the first. The first level is the green level, but I will explain you later why I displayed the gray level. If you go to the 15 minutes, you begin immediately to the green. If you go to the 30 minutes, you begin to the second green. And we had eventually other levels. If you go to the H1, we begin with the brown level. You see here the brown level, and even the green level. If you go to the H4, we begin with the brown level. If you go to the day 1, we begin with the, I don't know what is this color. Let's see. It is the pink level. If you go to the weekly, we begin with the red level. And this adapts automatically depending on the time frame. Okay? Another question, are TT related to FIBO pivots or standard pivots? No, they are not related to pivots. Does different time frames, different pairs, do we need to adjust the percent? No, Bones. For the time frame, as I showed you, the templates adapt the level automatically, and the parameters are the same for all pairs. When TT will indicate MX more than XXX? No, the TT will not give you a clear indication of MX or XXX. You will have to use the other parameters. It will be only in the next session, next Tuesday, when we will see how to use the Tiger tunnels to trade reversals. At this moment, they will indicate you XXX instead of MX. Yes, Alberto, this is, we can call these level dynamic Fibonacci levels. Another question. No, we don't use standard pivot fill. No. Jerry or Chris, have I missed some previous questions I have not seen?
The only question that's come up in this session a couple of times that you haven't addressed was using the Bollinger Bands for entry as well as exit. And I still think that you haven't really addressed that yet, have you?
Okay.
I don't know if you plan on doing that now. I'm just bringing that up because that question has been posted a couple of times.
I have given information at the beginning of this session. In the previous session, I have explained how to use the Bollinger Band for exit. When you see crabgrass on the Bollinger Bands here, you have to consider to exit, to make a MX or to make a XX. The difference between both will be given by the general consideration with other indicators. If you see, for example, a divergence here which is far from the home base, it's better to make an XXX. If you are not sure, you can always make an XXX and re-enter later. But we have addressed this question, how to exit with the Bollinger Bands. And for entering with the Bollinger Bands, I have explained you at the beginning also in the recap. I have added some information in the recap part of this session. Here, when you have a MO at the very beginning of a trend, the first MO, whether it is a BT, a BO, or a safe MO, you have to see sufficient, here for example, sufficient momentum before entering in the trade. And this momentum was given in the past by the training wheels, but now you can, depending on the pairs and its volatility, we can use the Bollinger Bands, and your best entry point, which will show you enough momentum for the entry, will be usually between here, the mid distance of the MO line and the upper because we are in an uptrend, the upper Bollinger Bands at the mid distance between the MO line and the Bollinger Bands. If you are higher, it's even a good entry point. So here, from this point here in this bar to the upper level of the Bollinger Bands here, you have any points to enter. Okay, this shows you enough momentum to enter in the trade. For a remo, you don't have to consider this momentum because the trend is already developing. But you will have to make the distinction when the price is making a consolidation here. It is not always the case, but when it is making a consolidation and you have a remo situation, like here, you know you are in a consolidation. Depending on the weights of the Bollinger Bands, you know if this consolidation is a squeeze or not. If it is not a squeeze, this means that you have enough place for the price to move between the Mo line to the next, to the upper or lower Bollinger Bands. You can enter immediately when you have the Mo. But if it is a squeeze, then you do not enter immediately here when the Mo line is crossed, but you wait for the breakout of the consolidation zone. Okay, and so you will make your entry here. And you will see that the consolidation zone is defined by the swing high-low, or an excellent clue is given by the Bollinger Band, which is horizontal, like here, and they will often coincide. And the break will often open when the price breaks itself the Bollinger Bands. Observe that in the chart in the past. You will see that this phenomenon is quite permanent. Okay?
Excellent. That was a good explanation of that. I think that's what was looked for. Thank you, Eusebio.
Okay. Geoff, just confirming, TT is used for XXX, not used at all for... No, Geoff. The Tiger tunnels are used as well as for MX than for XXX. You have to take the other consideration we have already used in the first session to decide if it will be an MX or XXX. But the Tiger tunnels will show you exactly or more accurately where to make your exit. Okay? For example, when you have a long bar, like, let's take an example. Here, for example, if you see the chart, you see that you have several long bars in the downtrend. You know that you are in a situation. You have several signs. You know you have a situation to make an XX or an XXX, an MX or XXX. So you see the price has crossed the Bollinger Bands, the Tiger tunnels. You know that there is a chance that if the Tiger tunnel is crossed, the price will reach the next one. But if it is not the case, it will generally stop in the middle. So when you see the price begin to retrace, it is in the middle distance between the two levels here. So don't wait. Take your profit as soon as possible. Do not wait for the price to retrace too much. Don't let pips on the table. Okay? Mongo, the non-lag 21. When the line is red and flat, good spot for an SC. No, I would not say that, Mongo. I would say it is the last place to make an exit, an MX, for example, unless you speak of the non-lag during pullback. And in this case, indeed, when the price, let's take an example. Here, we are in a uptrend. The non-lag is red, and it flattens. And here you have a place to scale in. Indeed, if all the other conditions are filled, of course. Another question, Jose, do you look for divergence with accelerator indicator to price as well? No, Jose. The divergence in the accelerator are not pertinent. I remind you that the accelerator is just a tumbler. If it is favorable to your trade, this will add strength to the trade. This will add more confidence to the trade. If it is not positive, you can ignore it without a problem. Okay? Okay. Next session, I will show you how to use the Tiger tunnels for the reversal. It is another kind of movement the Max looks for, but it is a little too soon. You must first practice with the Tiger tunnels, and at that moment, I will show you also the relation between the tiger tunnels and the waves we have seen at the previous session. Okay? But one thing at a time. And so, now, for the homework, I asked to the students to make 2 charts, and for the returning grad, only 1 chart. 2 charts, 1 long, 1 short, as usual. You will add the signal bar, but be cautious, the signal bar is only correct for the current price. For the current price, this is the situation of the current price. So when you will study past chart, the signal bar will not give you information, but you will have the acceleration, of course. So 2 charts, 1 long, 1 short, with the tiger tunnels, and take into account the tiger tunnels for your accurate exit. XXX or MX. To decide between the XXX or the MX, you have to use all the knowledge you have now on the max. But you must have most precise place, more accurate place to exit your trade. Okay? Well, and if you have time, because the markets open tomorrow evening for me, of course, let's say Sunday, and this is why I will fix the delay for the homework for Monday midnight East time. You will have some more time to do it. If you have the time, try to make a demo trade. You can use your platform in real time and make demo trade, but demo trade only. So you can make live trade, but not with a live account, only with a demo account. But first, the 2 charts, as usual, go in the past, scroll the chart and mark all the MO, the scalings, the XXX, the MX, the divergence, and so on. And then, if you have the time, Monday, try to make a max trade in real time in a demo account. Okay? And post your chart. So, to finish this presentation for tonight, let's summarize with some do's and don'ts. I have added in the PowerPoint page, in the do's and don'ts consideration, some more additional stuffs here. Pay attention to the waves, of course. Pay attention to the tiger tunnels for your exit. You must have more accurate price level to exit here. I have added here some other consideration. Don't trade against the non-lag. Don't trade against the Vinini. Okay? Don't trade, never trade during the news. Never. 30 minutes before and 30 minutes after, don't trade. Okay? So you must have all these considerations always in mind before trading. Consider these points as being part of your trading plan. Trading plan. Okay? Well, let's go back to the chart, and if you have some last question, we can answer this question. So, don't trade against the non-lag. Okay. Here, we are in a downtrend on this chart, you see? And at several points, you have possibility to scale in. You see here, and here. Not here, but here. Here. You have 3 cases here. On this case, you have the non-lag, which is red. It is in the color of the trend. This is right to scale in here. No problem to scale in. Here, when the setup bar appear here to scale in, you have the non-lag moving average, which is trending up and which is green. This is often a difficult situation to take the scale in. Moreover, you see that the tiger tunnel here serves as a support. I prefer say as a resistance to the movement. So what I do here in this case, most often in this kind of situation, I wait for the price to cross the non-lag, and I make my scaling here, just below the non-lag. You see? You have also the situation here. You have a place to scale in. Instead of scaling here, you see, on the break of the support of the pullback, the non-lag is pointing up and is green. I wait just some pips for the price to cross down the non-lag. It is like in the poker game. Let your opponents announce their color. I wait for the price to commit itself in the direction of the trend, and I enter here, or just when the price goes over the non-lag. This is what I mean. Don't trade against the non-lag. Okay? Ravi, as I have said, the accelerator is just a tumbler. You can eventually indicate if the accelerator is favorable or not. In which video you speak about the difference between MX and XXX? Oh, this is being explained in the first video. It is explained in all the video, in all the 3 sessions. There are 3 more scalings after SC1. Any reason for not selecting it? Where after? No, I have just used this example because there are typical examples. But here, for example, there, you have the scaling. You can take it if you want, if there is no counter indication. The next one, here you are against the non-lag. Wait for the price to cross the non-lag. Okay? Here, you have one, but you are above the more line. Wait for the more line to be crossed, because in fact it is a remo in reality. So, scaling here. Okay? Homework from previous months. Oh yes, Vanessa, there is a very, very important homework I would like you to do. Make the statistical scrolling exercise. I have explained at the beginning. This will give you the right edge you have with the max. And with this knowledge, you will have a total confidence in the max. And if you have time, I encourage you, you don't need to post any results. If you have time, go even in the past, 1 year ago, 2 years ago, 10 years ago, if the pair existed at that time. I think, for example, for the Euro USD. See what the max was doing at that moment. Make statistics, and you will see that you will have this average success rate of 85%, around 85%. And this must give a total confidence in the max systems if you use it with discipline, with patience, with persistence. You will have some losing trades, of course, 15% in average. You may have 2, 3, 4 losing trades in a row, but be persistent. Soon or later, you will have a good movement to trade with the max. You will see also, if you make these statistical exercises, that in general, you will have around 3 more each day in each pair in the 5-minute time frame. 3 more in each pair in the 5-minute time frames. Whether a BOMO, a BTMO, a SafeMo, or a REMO. 3 each day in each pair. If you trade 4 pairs, or if you monitor 4 pairs, this means you will have an average of 12 opportunities to open a max trade. And if you know that you will have eventually 1 or several scalings with each Mo, you can imagine the profit you can make with these techniques. Okay? Well, so I remind you the the homeworks for Monday midnight. So you will have enough time to make your 2 charts and your demo trade. Okay, I thank you very much for having attended this session, and we will see you at the next session, which will be Tuesday 18th at 9 p.m. East. Okay, thank you very much. Bye-bye. See you.